Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date, Monday, March 17th, 2014. Markets are trading sharply higher today after relief out of Russia and the Ukraine. Again, Crimea voted to join the Russian Federation. However, there was worry on Friday and even on Thursday to some extent that it would be more involved. There would be an invasion fleet that went into the Ukraine. There could be violence involved, and none of that has happened. It's actually been a very quiet kind of upheaval there as they joined or voted to join the Russian Federation. And granted, Obama came out today and said we're going to impose sanctions here, here, and here, but we all knew those sanctions weeks ago. Well, maybe not weeks ago, but at least a full week ago, and it's nothing new. And in all fairness, it shouldn't even really have an effect on anyone out of Russia because they knew about these coming sanctions literally a week ago, as I said, and they could have taken steps as a precaution to get their money out. So really no big deal here. I mean, this is just another day in the markets. Buy the dip mentality. We have seen a rally in the dollar yen, which has also helped the markets. And even the Russia kind of issue is now subsiding. The China economic news is also fading. As bad as it was, the markets don't seem to care again today. Now, based on Friday's close, this is important, guys, because based on Friday's close, I do think that the markets confirmed a short-term top. So again, if we look at the market right here, we have the pivot top going about a week and a half ago, and then we have the pivot top from last week, and then a lower high here. And really the big sell-off on Thursday, even though the SPY closed exactly at the lows from Thursday, which technically wouldn't show confirmation, the S&P, which is a little bit more important, did close below Thursday's lows. So for me, I'm going to go with confirmation there and solidify a potential short-term top. Now, is this a surprise bounce for me? No, not at all. In fact, I covered two short positions on Friday on anticipation that we could see a bounce in the market as it was relief if things didn't get out of hand. And sure enough, that's what happened. So I do think this will be a short-lived rally, though, as we will start to see selling again. Remember, the Fed starts meeting tomorrow, and on Wednesday we'll hear their new FOMC policy statement, and that statement's going to be key. We all know they're going to taper another $10 billion. That's not going to be a change. The big change is going to be what they say about going forward. How about interest rates? When might interest rates rise? What do they see in the economy? Is the economy strong? Is it weak? Is weather still an issue? And those type of comments on Wednesday will create some movement and should be a great trading environment. Now, just a heads up, I took another good-sized profit off the table today, guys. I was short JO. All right, I had short position here on JO in terms of shares as well as options. I had puts on this as well. And this was a great trade, folks. This is one for the record books just because it was such a beautiful setup. And if we zoom in on this chart, we went short right here on this gap up right here. Why? Well, because you had a topping tail, a doji, another topping tail right there. Bearish signals, max move away from the 200, even the 20 MA maxing it out, and that was just telling you, the writing was on the wall here, that this was going to come in. If you played the puts, you literally made 75% return on your money on the puts. All right, on the stock, you made $3. All right, getting out at 37.65 after we shorted at 40.65 for a $3 profit, or basically a 7.5% move on the stock to the downside. And again, you're going to hit support here. This is why I took my money off the table, because you're getting very close to the 20 MA, and it's not worth after 3 down days, 1, 2, 3. It's really not worth it, in my opinion, to hold it on just trying to squeeze a little bit more water out of it or profits out of it, just in case it does gap up tomorrow or push back up a little bit. So took profits there, and this was a beautiful trade. Congratulations to members. Another profit in your pocket, well over 7% there. We made close to 10% on a couple plays last week, and again, it's just money's rolling in regardless of the market direction. That's what I love about what we do here at InTheMoneyStocks.com. All right, on my radio show this weekend, I see it, you said you should be bearish on gold. Gold is falling. You got this hammer candle on the daily chart on Friday on gold, and today gold is declining. The GLD is down about 1%, so nice fall there. That should continue minimally to this gap fill right here. And once you get into that gap fill, you start seeing a little bit of support with the 20 moving average as well. But I actually think it could flush through that in the short term and come down quite substantially. Other stocks on alert. Facebook was lower early in the day, but has reversed and is now up $1. That's kind of been a wild ride stock. Facebook is actually one of my favorite stocks that will go down in 2014. I think it's going to go down at least to the 55 level. Once it gets to 55 to 54, I think that's where it's going to hit some support. But I think within, honestly, a couple months, it'll be down there as soon as you get a little bit more downside in this market. All right, this stock again is momentum play, and after buying out WhatsApp for crazy amounts of money, I just don't think they'll be able to perform on the level that they've been performing. They'll still have great earnings, but it's not going to be at that level that's required to keep the stock grinding higher. So I'm a big bear on Facebook over the next few months. All right, especially considering it's below the 20 MA. Even if it recaptures the 20 MA, as long as it doesn't even take out on a closing basis this little pivot high up here, there's really not much that could go on, in my opinion, to drive the stock price north. A couple other things to go over here, folks. I want to go over a couple other charts out there. Apple, AAPL today is hovering up about $3.45. I keep on bringing this up because I do it on purpose. I want to show and explain to you guys how it's a inverse indicator now. All right, so basically what's happening is that Apple no longer is that growth stock. Now it's more of a stable. It's almost like a Dow stock now. Dow, where when markets get really bad, people kind of run into the Dow stocks for safety because they pay a dividend, and they're kind of the stocks that will always slowly grow but never really outperform. That's what Apple's become here. And the reason why you know that again today is because the stock today is up $3.50, but that's only 0.66%. If you go to the spiders are up 1%. If you go to the Qs, which is what the Apple's in, Apple is underperforming the Qs by almost a half. So the Qs are up 1.2%, Apple's only up 0.6% essentially. And what does this mean? Well, basically Apple still goes with the market, but it just doesn't perform as well either way. So if the markets are collapsing, and let's say the markets are down 2%, Apple might only be down 1%. And the same thing goes on the other side, where if the markets are up like today 1.2%, Apple's only up 0.6%. So it's just kind of more becoming one of those like old school stocks. I know a lot of investors don't want to hear that because they think of Apple as that huge growth player that had a monstrous move from 2009 to 2012 before topping out at 700. But that's the new way it is now, folks. I mean, it's just the nature of the beast, and we got to get used to it, right? JP Morgan Chase, let's bring up JPM here. Okay, JPM. JPM is having a little bit of a bounce. It's kind of performing right with the market. There's nothing outlandish about JPM today. It is doing exactly, essentially, what the market's doing, basically in line with those markets. Goldman Sachs is up 1% as well, kind of right in line, up $1.78 on the day. Was up much more earlier, but did come in quite a bit over the last couple hours as well. Chevron today, CVX up 84 cents, underperforming the market, but that's because oil is down today. The USO down about 36 cents. USO is just trying to hold on to this 50 MA. I still think there's a chance for a little bit more of a bounce to the upside, but if it doesn't get a move up, I would say tomorrow, then you could be setting up a bearish pattern to start coming in. So we'll watch that very, very carefully on the chart of USO. JJC is another one. JJC is bouncing today. This is Copper's ETF, the ETF that tracks copper, and that had a monstrous down move last week, but has stabilized, and I think this one could bounce a little bit more. I wouldn't be surprised to see it bounce back to, let's say, 37 or so, another $1.20 higher or so on the charts. And again, that would take you kind of right back up in here. Okay? Gold, we talked about gold. Silver, let's take a look at silver today. Silver is underperforming, obviously down on the day as well, kind of following gold. A lot of the issues with silver also come into the aspect of growth globally. Remember, silver is an industrial metal, and as long as we continue to see weakness out of China, silver demand is going to be perceived as being a little bit weaker, and that's probably why it's underperforming gold overall. Okay? Trying to see if there's anything else out there we want to mention, but I think for now that's pretty much it. We've had a lot of news about Weibo, the IPO of Weibo, and the IPO of Alibaba being listed here in the U.S. and so forth, and that's given stocks like Yahoo a little bit of a bounce today. If we take a look at Yahoo, Yahoo's up about $1.64 today, decent little move up. Although in all fairness, Yahoo is just trading inside of this range. You can see it's up, down, up, down, up, and that's really just, again, what you want to do is if you want to look for a breakdown on Yahoo, just connect these lower pivots, and when it breaks, it'll go right to the 200 there. But as long as it stays above, they can float this thing up. Really what you want to do is you want to connect these lines here, and this would be your upside resistance right up here, which interestingly enough would kind of coincide over here with a double top as well. And again, that could very easily be seen. We could see Yahoo kind of trend in this range until it breaks this lower trend line, and then it should collapse. Aside from that, folks, I just want to encourage you to come to InTheMoneyStocks.com. Take the 7-day free trial. Let's get this party started. Profits continue to be made. I don't care if the market goes up or down. We're still going to make money, and that's what good swing traders do. So come join us. Take the 7-day free trial to the Research Center and learn how to profit for life. Take care.